The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Ready for the fireworks tonight, of course. Feels like the Super Bowl's tonight. You know, waiting to see what Mr. Trump will pull out of his little tool belt there. Just really concerned about that, actually, in my opinion. I know people are ready for some different folks up in Washington, but you know, like a lot of people are saying, a lot of the political analysts, he's not the most presidential guy in the world, but you know what? The people have spoken, so we'll see what happens. Really, gonna get the popcorn going for that whole ordeal tonight. It's gonna be 2 hours of interesting comments. But as we look at the situation on the markets right now, the first thing I want to actually say is yesterday I was actually on Tom's show yesterday afternoon, and we totally rely on our breadth indicators for a lot of, you know, index tied to the marketplace type situations. But yesterday after the close, we had a little bit of and it was only after the close, we had a little bit of a problem with our data vendor. So some of the things we were showing after the close on the drill down instruments themselves were not exactly spot on. So we've cleared that up. And that was actually an e-signal problem that we were having with, that's where we get some of our API data feed from. So apologize for that. Done a couple of things yesterday late, and we fixed all that with the data vendor, called them and had some adjustments made. So, but again, it never affected any of the breadth calculations during real time yesterday afternoon. So just want to let you guys know that. We're taking a look right now. We're going to take a look at the euro, and we're going to take a look at the dollar. That's the first thing we're going to look at, because I think this is kind of the, you know, the one of the big major leverage points on what could possibly be driving some of the global marketplaces, especially the S&Ps. So we're looking at the euro here, and you know what we've pretty much talked about religiously is getting back below 109.50. That's happened. I'd love to see a weekly close below that number, just like we did a week or 4 weeks ago, actually. And I know we kind of ramped back up, but I love the way this thing is acting now. I like the way it's consolidating down here. To me, this is a continuation pattern in general from classical technical analysis standpoints. And I'm looking at stops above 109.50 based on the height of the box and using about a 15 to 20% multiple for the stop on that. So we've got 109 on the long-term type trade. So to go over that mechanism, 109.50 into 114.50, let's just call it that, 500 pips. On a long-term trade, I'm still letting this thing try to bounce around 65 pips above that weekly unfair high for weekly unfair low for short-term traders to give it a little noise level. And the targets, obviously, long-term are going to be around 104 right now. Or we're going to get some new information on the euro here to try to guide this down on our dailies. But on the short term, guys, you know, you might want to look at this stops above. Let me pull up our 240s here. Stops on short term, guys, you're still going to be looking at stops a little bit tighter than that relative to this 240 box multiple of about 20% above that 109.50. So again, I think that's a big number. Obviously, it's a big number. We hit it today again. We hit it, let's see, a high of 109.44. So we got about 5 or 6 pips up into that number again. It came off. I love the way this is acting again. And again, I'm just orienting stops based on my appetite for risk for a long-term trade above 109.50. Short-term guys obviously tighten it up just a little bit relative to that number. Short-term targets 108.60, and that's actually an unfair low on our weekly, which was hit yesterday. If you can see this, we reached a low of 108.48 and that unfair low is 108.49. So we hit that to the tick. We bounced off. We're kind of getting back into that weekly unfair low. We're in a little bit of a kind of a collection area, in my opinion, on the short side for this to dive much lower. And that much lower number would be the 104, 105 general area. Let's take a look at the Canadian dollar. Actually, let's take a look at the U.S. dollar first. I'm sorry. So, what do you do with this thing? So, again, the long-term target's up top, 99.51. But what's happened so far yesterday and today, we reached that unfair high. We're crowding it again. And that unfair high being the initial target's 98.31. Now we're waiting for a breakout above 98.31. In my opinion, this type of action, you want to see things come off of these inflection points and just get the heck away from them. Right now, that's not really happened. It happened yesterday, intraday. We had a good pullback where we're kind of compressing back up into this thing. And just remember, like on the U.S. Treasury bond trade and a couple other things on a daily, when we start doing that crowding action, that's usually predictive of a possible breakout. And you've got a profile sitting here, unfair high. You got much more of the fair auction to go in the weekly up to 99.51. So I'm not a big fan of shorting the dollar. I think you just got to wait and see on the breakout situation, which actually would help the euro go down. And here's the 240. So it looks pretty ripe on the long side still for the U.S. dollar. That being said, let's take a look at the Canadian dollar. Normally, I would take this attitude. This is the Canadian dollar. Obviously, I think the U.S. dollar is going to go higher. That could, to some degree, affect this to go higher on the devaluation of the Canadian dollar versus the U.S. dollar. But we got up into the 130. I can't even believe I'm saying these numbers. 132 on the Canadian dollar. But here's the daily. We've got an orange bar attempting to appear here. I'm going to go into our scanner really quick, and I'm going to kind of show you what that means just by kind of gazing across some instruments here. Well, where are we? Here we go. All right, so here's the U.S. dollar, Canadian dollar down here. You see that yellow peel back happening now? That's normally, and I'm going to pull up our TAS says here, and I'm going to say on our intermediate, trend is favored along and has been enforced for 28 days with primary intermediate support at 131.57, blah, blah, blah. Be on the lookout for new daily profiles attempting to form. Now, it says caution along as targets may have been met in the interim. Okay, so why is it saying all that? It's saying all that because we've got a yellow peel back little indication here on our daily, and that's really indicative of what's going on. And the scanner is actually usually a little bit ahead of the charts. That's happening because of this yellow bar that's happening on our daily. I'm going to get this out at some point. And that means that we've got a new profile attempting to appear, which means a new supply area. So that means that the algorithm is saying that we may have a new balanced area appearing, and therefore it may be time to just sit tight and wait for lower support numbers to happen, and conversely possibly wait for breakouts to happen outside that balanced area. So what does that mean? My thoughts on the dollar are we're going to go higher. We may bounce around in that fair auction a little bit before we do that, and that may be the same for the Canadian dollar. So I think it's time. You've had a good run with this thing. Here's our daily. You've had a good run with this thing, and you caught another breakout here, caught about another 200 or 300 pips in it, and it may be time to start looking at this as a target-rich environment now on the long side. Now, people always ask me about targets, especially I had a call about the Japanese yen. Or an email about the Japanese yen. I hope the person doesn't mind me talking about this, but it's like, where's the targets on this? The targets usually, in my book, sometimes you have some defined targets, but a lot of times, just look at the yen. You don't have any indications, and the reason I love this type of methodology so much is you don't have any indications really that there's a warning sign to get out of the long, and that's going back to the Canadian dollar. We've got that orange bar attempting to appear on the scanner, that peel back. You haven't really had any breakage of rules here on the yen since we started breaking out and letting the 240s regulate it up. Now that's the long-term view. So my view on the yen is it's going to continue to get devalued. And how can you set a target? I mean, the recent highs are 126 approximately. So, we're probably going to meet that area. And I don't see any reason to really take this trade off as of right now. So you could look at that area as a target. But again, a lot of times I've made some huge mistakes by getting out of some very profitable trades too early before. You can't go wrong taking profits. I know people say that. But if you're looking at this from a long-term basis, I just don't see any major reasons to get out of this trade right now. Short-term, guys, the numbers are support at 124.60 now. That's the situation on the yen. All right, let's hit a couple other usual suspects. We're going to leave the S&Ps till after the break. Haven't been talking about the NASDAQ. Going to hit that today pretty good. Treasuries, gold. There's just nothing to talk about with this gold trade. It's just, the thing to talk about is we're going to have another breakout situation below 1080, and you might ought to be in that short. So that's the way I'm looking at gold, and just waiting patiently until that happens. You can set some pretty cool order entry features in a lot of platforms now, OCO orders or contingent orders, things like that. So if you get in the trade below 1080, then you can enact immediate automatic stops and targets after that entry. I don't know if you've got those on every platform, but a couple of you do. Let's take a look at soybeans really quick. This has kind of been something near and dear to my heart lately. We've been able to look at it since we closed on the daily, went back and retested some higher numbers around $10. We've actually, without question, had the sell-off, and now we're coming back up into these inflection points, not seemingly wanting to get through those areas around 955. We reached a high this week of 956. So I'm looking at that as stops above. The short, in my opinion, can be taken again. I think the risk reward on this trade's pretty high. We've got 910 sitting down below, and your stops on this are more than likely going to be 7-8 cents above this particular 955 area. You're going to have to give a little bit of noise on the long-term inflection points. So that's November beans. Excuse me. Didn't talk about that. Here we go. Silver. Even looking more ridiculously bearish than gold, stops above 1463, and that's the way I'm looking at silver. I got stopped out of this trade a little bit before, but I think I like this consolidation and staying below the 1463 area, and stops above there based on your appetite for risk. Whew. When we come back, we're going to take a look at the NASDAQ, the S&P. We're going to also take a look at some stocks that are meeting some pretty cool criteria, and some earnings-related stocks, without question. There's just a basket full of those. So we'll be right back, guys.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We're going to take a look at the S&Ps really quick. 2102, 2104, we talked about those numbers quite a bit. That's still the big Maginot line, the kind of area of concern, the high probability, wait for the market to come to you area. And we caught a little bit of a pullback off of that, right into that, yesterday, top of the box on the 240s too, just bouncing around, very non-directional. The breadth really doesn't have, going back to our breadth calculations on the S&P here, just going to look at our weekly. This has just been languishing, extremely non-directional in the long term. Therefore, finally, one of the things Steve Rhodes said a while back, it just sticks in my mind. It's almost like I pair him with this statement. It's finally a stock picker's market. Gonna stick with that. I mean, there's a lot of stocks doing well, a lot of stocks doing bad. I know that's the case sometimes, but it just seems like there's no concert in the pack for this thing to move up right now. Therefore, we're just still looking at some shorting opportunities and also looking at drilling down into instruments themselves and trying to find the strong stocks to buy and the weak stocks to sell. So that's kind of the way we're looking at it relative to what the market's doing. So that's the crux of relative strength trading. And I think this scanner really kind of paints that picture relatively well to give you some great ideas. We talked yesterday, about this 2102, 2104. We hit a high yesterday of 2107. That's why we always talk about give yourself a little bit of a noise factor, especially if you're in the long-term trade. You've got to take a look at the height of the profile. And how do you figure that out? You go into the scanner, you go into your futures section, and you figure out the levels here. We don't figure out, you just look at them. There's 2104. There's the height of that box. It's 40 S&Ps or so. And you want to more than likely do multiples of the height of that box to kind of regulate some of your stops. That's kind of the way our automated systems work, and we just kind of rely on that. We do the back testing, and I'm not going to argue with probabilities or statistical references when it comes to that methodology. So as we look at this, what's your targets down below that 2085.50 area? Without question, these are our daily unfair lows. These are also hit in the scanner. And you may be thinking, where am I getting the 2102? That's the POC on a wide box on the daily. So what you'll do here is you'll look at this on the landscape view, and you'll see these 4 time frames all at once, right? So this is the 2104, this is the 2102, and this is where we're at right now. All right, this yellow line. Now, this is not to the tick real time. There's some, these are all calculated off real time prices, but to do all these calculations, sometimes you got a little bit of a delay in this and the level of the market moving around. So just be prepared for that. There's that 2085.50 area sitting there. So again, this is kind of why we're getting this. And the reason we're paying attention to this POC is because the width of this daily box being more than normal. All right, so that's the drill on that one. Let's go into the NASDAQ, and here is the NASDAQ right here, above profiles on the weekly. Here's your inflection points to pay attention to. Here's the landscape view. This is where we're at relative to profiles here. So again, breakdowns below 45.60, you're gonna have to pay attention to. Let's go into the NASDAQ really quick. All right, here we go. September NASDAQ. We don't talk about this a lot. Here's the situation on the NASDAQ, obviously an outperformer relative to the S&Ps, but if you're going to short an index or play around with shorts in general, you've got better opportunities than the NASDAQ, and you're going to have to wait until we get below 45.60 to play around with this. And that coincides with the bottom of our box on the 240. So I don't, in addition to this not being the most attractive short in the world, you're going to have to wait and see. When the NASDAQ moves, it moves. And when it starts changing its tone, there can be a lot of points to be made. But, this is kind of have to be a wait and see. You've got short-term resistance at 46.12. But again, that's trading against the long-term trend up. Much rather be short the S&Ps right now. Can you go long? Without question. But I just don't think the leverage is there on the long side based on our breadth situation just being mediocre at best. And this thing's been flip-flopping around lately with no direction. So maybe they're waiting for Donald Trump to say something tonight. Who knows? All right, treasuries, let's hit this. Then we're going to hit some stocks afterwards. I really enjoyed seeing this climb up in this 27.11. I thought we were going to kind of use that to maybe even go higher. That didn't work out. Now we're out of the market, sitting there waiting. You got another buy point now as of today, 126.16 on the U.S. 10-year. So that's what I'm waiting for. Let's get down there and let's see what happens on the buy side down there. We'll be right back, guys.
Tom O'Brien has just announced a live online workshop taking place Wednesday, August 12th, 6 trades for September. This special event will be open to all subscribers to his daily newsletter, Market Insights. Tom will walk you through 6 trade setups in the market he's identified setting up for September. 2 long positions, 2 short positions, and 2 option trades. New subscribers will also receive a free copy of his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. But we're not done yet. We're also including a Tiger's Den membership as part of all Market Insights subscriptions at no cost as well. You get Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, 30 days of his newsletter, Market Insights, access to his live online workshop, 6 trades for September, and access to the Tiger's Den. This offer is only valid for 2 weeks, so don't miss out. Sign up for your 30-day free trial to Market Insights at the front page of TFNN.com today.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. We're going to go into our ETF section of the scanner. We're going to take a look at this, some rankings here on short-term, long-term, the ultra long-term, weekly. This is kind of where the ETFs are on a long-term basis. And as you'll notice, there's 9 major spider ETFs here that pretty much cover quite a bit. Not as detailed as some of the ETFs out there. And by the way, we've had some emails come in with some ETFs that folks want to see up here. We're looking at putting those in right now, so keep them coming. But this is kind of the broad marketplace ETF, you know, big 9, if you will. And as you can see, 5 out of the 4 are positive on a long term. On the intermediate term, we've got, 7 out of the 9. This is ranking breadth. Obviously, the XLE is just buried in incredible despair. I don't know how else to say that. But if you'll take a look at this, we've also got breadths on these ETFs. So when you start seeing some green shoots on the breadth situation, that's the 60-minute here. We're starting to see some of these stocks trade above 60-minute profiles. But again, before you start getting your toe back in the water at all on any of the XLE stocks, and I'm not very bullish on crude oil, you probably want to see the 240 breadth crossover positive, and then you'd start looking for, opportunities in here. You'll see the greens, the green shoots. Obviously, TSO has just been incredibly, strong. Cimarex, XEC starting to show some decent green shoots, if you will. You're also able to look at some of these stocks relative to new profiles attempting to appear down below, which will be new demand areas. So ESV, Noble Corp, and let's take a look at Noble Corp. Here we go. NE. So, and again, we got some green shoots there on the 60 as of the close yesterday. So NE. Here we go. Now, what the scanner does, you notice that we have this little situation going on in Noble Corp. We've got a yellow peel back. So I'm going to go over here and go to Taz says, caution to shorts, intermediate view. Targets may have been met. So what's going on here is actually jumping the gun ahead of our prints on our daily on the chart itself. So what does this all mean? So on Noble Corp, obviously we're getting killed here, but we may have a new profile attempting to appear down here. And if you've been short Noble and short the XLE and short oil, like we've been kind of talking about all the time, you're short in NE, then you may be able to start looking at this as a little bit of a target-rich environment. And by the way, we just kind of started poking our head above on the 60-minute yesterday. So we may get a little bit of a bounce here in NE. It's not, I think lofty aspirations for this bounce will be 1278. We're trading 1171 right now. So that's the way I'm looking at that. Let's look at crude oil while we're looking at this. You want to always try to find opportunities, using a relative strength trading concept, short and weak stocks in a strong market, things that won't be as painful if the market goes the opposite way you think it's going to go, and vice versa. But there's always really good opportunities when you have market turns, either in the index itself or the instrument that's within that index. And I just don't see this particular sector looking on any level like it's turning on the crude oil scene. A lot of guys are doubling down on this. Oh, $45 crude oil. I mean, just, this thing to go to $35 quickly, it could go to $55 quickly. But remember, things on the lows can go lower. And, you look at the Canadian dollar, I mean, very natural resource dependent type situation. I mean, they're getting hammered up there. And, we haven't done that major throw up move. We talked about Sherman going through the South the other day. He had the right idea. That's not a big, name down here in the South, but, he had the right idea. Let's make it as painful as humanly possible so this nonsense will stop. All right. That's the same with a lot of stocks. I mean, I hate to make that analogy, but, until the pain gets super mega great, and those are usually big washouts, kind of like Sherman, the Atlanta, the Charleston, the Savannah situation, he made it so painful, that's when it turned around. And, I'm going to look at the stocks in a similar fashion and crude oil in a similar fashion. We want a big move down, reassess what's going on, let some new profiles appear, and then it might be time to start nibbling. That's not the case yet. So let's take a look at natural gas. I saw that little moniker in the den there. The September contract. I can't get real bullish on this right now. We talked about getting back to below 2.824 and maybe hitting the gas pedal on the short side. You've got targets again down below 22.704. And again, this thing consolidating down here is kind of scary. That we might, and again, this is, you can look at double bottom, triple bottom, however you want to look at it. But again, I think that, a flush move is probably in order on this thing. We've got some very wide profiles we're in right now on the long term, but it seems like we could retest the 2070 and even what number did I just say? 2070.04 and possibly even the 22.646 area down here. It's obviously it can only go to zero. So, all right, so let's take a look at another stock, Disney. And if you've been living in a cave, I'm just going to alert you to something. This is a major haircut without question. And how do you trade this? This is our daily situation. This is another great reason why you don't throw the dice before these announcements. You're going to be right 50% of the time, statistically speaking, if you keep playing that game, but that's the wild ride. Might want to avoid those types of situations. So here we go. So here's the long term. In pre-market, we're trading right now, which is not being reflected here, 111.20. All right, so what do you do with this? So right now, on a long-term basis, they haven't thrown out the baby with the bathwater yet, but right now we're sitting in the middle of a fair auction. If we close tomorrow, or you want to play around with this 111.46 area, top of the box on the weekly, I wouldn't be opposed to that. Looking at this from the short side for this to go back and possibly test the 105.02 area. Do I think it's time to pick up Disney on sale? Not yet. You'll know on a long-term basis by tomorrow where this thing closes, without question. Tomorrow's Friday. But again, I think we could bounce around in the fair auction down here in this balanced area, and that's kind of the way I'm looking at it. And you may be able to look at support at 105.02. But again, I'm not the biggest fan in the world of getting long stocks right now anyway. So let's take a look at the scanner. What I'm going to do now is I'm going to go into some more ETFs. I'm going to go into the, where's we at? XLB. Actually, I want to do that. Let me go into our S&P 500 for a second. I had a sort I was doing earlier. By the way, we talked about a stock yesterday afternoon, Marriott International, MAR. That really met some cool criteria. We were looking at it relative to the scanner. A big sea change, in my opinion, has happened on that stock. And if you're wanting to buy something to put in your long-term portfolio, you may need to avoid that one. I'm going to pull it up really quick. And this is the kind of things you really like to see on a long-term basis, by the way. I'm going to pull up the chart on Marriott, and this was actually something that alerted me. So when we start breaking down below profile 75.42, this is our weekly. That's going to be the major stops above. As you can see, we haven't really mitigated any of these profiles on a long-term basis in a long time. We had a little bit of a disturbance there, but right now you're going to be looking at resistance, hoping the market can come back up to you. 75.42, that will be, it's already retested that last week, and you've already retested the dailies here at 73.46. So, what do you do with this now? You don't go long. It's not on sale. A sea change has happened in this stock, and I think you need to look at this from the short side now. Let's take a look at stocks that may have shown some cracks in the armor here. Let's show stocks that are trading above the profiles on a weekly and below on a daily. Can't believe that's the only amount of stocks here. Huh. That's out of 500 stocks. Are you kidding me? That's weird. Anyway, SNDK. Let's take a look at this one. All right, so, what do we have here? It's, we've obviously been in a downtrend recently. This is since the highs of July 2014. So we 3 weeks ago, we came back and retested that area right there, unfair lows, 65.44. So, we're sitting above profiles here on the weekly, and I love how this thing has emitted a profile down below, come back this week, and actually retested that unfair high. So I was doing doing a scan for things that have possibly shown themselves as kind of breaking down here. But remember, long-term takes precedence over intermediate term over short term. And I want to pull up something really quick on SanDisk. Pull up our profile here. So we've come back down and tested this 58.03. Okay, so let me show this again. So there's our 58.03 area. We came back and hit that this week, as you can see by the charts, but we're trading below profiles on the daily. Remember, this takes precedence. So I like, from the change of tone here. Get this chart out of the way. From the change of tone here that's happened, where we're breaking above profiles, and this profile, remember another thing too, it appeared below price action. That's bullish in general. So can we have a little bit of a change in SanDisk right now in trend? I think so. And it's kind of cool that we've had this rally up in unfair lows on the weekly, had the weekly on the current box appear below price action. We've tested it this week, and we've reached the low this week of 58.51. That number's 58.53. I think you got a long opportunity on this. Stops down below 58.03. And you might have a little bit of a 5 or 10 point run in this stock. That's the way I'm looking at SanDisk. All right, EW. Let's take a look at that one. And what's going on with my charts here? There we go. All right. Don't know why that's happening. Let's see if we can, maybe it's the New York Stock Exchange here. Hold on. Let's go to another instrument, see if we got the same. Yep. I think we got a New York Stock Exchange feed issue right there. Sorry, guys. Let's take a look at the Shanghai. We're going to avoid the stocks for a second. All right. So we've been talking about this one. This is another shoe that could drop on the Shanghai, get back down below 35.54. We've been talking about that. That's obviously going to be a little bit of a harrowing experience for U.S. investors to see this thing can, come back down to reality. I think that this consolidation action with profiles above are warranting that type of attitude for this to go lower. So that starts happening, 35.54 breakdowns on the Shanghai. It's going to affect seemingly a lot of other lives when it comes to global indices. So keep that one in mind. Haven't talked about this in a while, but we really had forewarned something like this on the ruble. We had loved this trade at 53.12. If you've been watching this show, stops down below, and Eddie's been on the show. Oh, my charts are flipping out here. Anyway, let me pull up our scanner. I can get that really, really quick. Here we go. So there's that 53.12 area. I'm mousing over my cell there. That's been the support. And now, this has literally been a really, really awesome trade. And what do you do with it now? So we've been talking about, if you can see how this works, close above, go back and retest. Those are the powerful trades. And now we got the ruble at 64. Eddie was on the show specifically talking about, the other shoe was getting ready to drop for this country. This rate environment was just freaking everybody out, and it's going to hit home at some point, and it's hitting home in the devaluation of the ruble in a large way. And nobody's talking about this on TV. I don't know why. But here's the situation also. As we edge up, we found support again off these profiles. There's zero reasons to short this. And it looks like even on the 240s, we found support again on the short term. It's not the time to short this. It's not devalued enough. This thing could go much higher. And remember those highs around 80. I mean, this can happen again. So, again, I think we made a good call on this one. But what do you do now? You don't short it. And there's no reason to get out of the long trade. So I hope you guys have been paying attention to that one. We're going to be right back after this break. We're going to hit a couple of stocks, Tesla, Kohl's, a couple other stocks before we get going into the market opening.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. John, are you there from Philadelphia?
Mr. Logan, I am here. Thanks for taking the call, sir.
Great. Good to hear your voice. Yeah, you want to take a look at wheat on the September contract?
John, yes, I would. I'll give you and your listeners some backgrounder.
Sure.
For the benefit of those in the tiger's den, I posted in some long-term charts where one can clearly see since peaking in 2011 and 12, wheat has been in a protracted bear market. And it was earlier this year, back in the March-April timeframe, I started trading exclusively from the long side. And I could have earned more profits than I have, but it's done reasonably well for me thus far. The past 4 weeks, I had been flat as wheat has been falling back. Mm-hmm. And I just took a long position just this week in the September Chicago wheat futures, the WU5 contract, right under $5 a bushel. And I will tell you, from the supply-demand perspective, we're getting to the point where clearly supplies are burdensome, but now we're getting under the cost of production of wheat globally. That's number one. Number two, we seem to be bottoming price-wise. And number three, here we are in August, and wheat has a very strong seasonal tendency to fall and make annual lows somewhere in that period of time from June to August, followed by seasonal strength in the last quarter of the year. So I'm looking at all these things thinking, okay, fine, opportunity for profits on the long side are here. That's my position. That's the background. Can you tell us what you see with your profiles and that good data, which I have to tell you I find very helpful, John?
Yeah, thanks, John. Those are very good comments you just made, and I take your words at face value. You've made some really good calls before. And I actually agree with you on this. And the reason is we've kind of come back into support on a really wide profile down here at 493, if you can see the chart. And that's actually in the scanner on the September contract. But there's another cool thing going on here that is very helpful. As we kind of meet in that long-term slant, I'm going to kind of stay on that with you. We made higher lows on our navigator down here, and we're actually trying to cross zero of all things, sitting at the bottom of the profile as price action was making lower lows. So that divergence in itself and coming back and waiting patiently until we got into this support area on the long term with navigator possibly crossing above zero, which is kind of a sea change kind of event on a long term on a weekly. I think you've got a really good situation here on the long side. And the good news is you can orient stops below 493 based on somebody's appetite for risk, whatever that is, and just let this thing breathe a little higher. I think the first targets as I pull into the daily are going to be 524, 525. But again, I think the long-term slant here, that's going to be a little bit of a resting point possibly. But this actually looks, I'm glad you brought it to our attention. This is a really nice setup and a huge risk reward scenario.
John, thank you so much for bringing up both. I have to tell you, your work combined with the TFNN team's creation of Tiger TV and the Tiger's Den is just fabulous. I had not seen you address wheat in the past couple of weeks.
Yeah, I have.
And you know why I'm bullish, and to see your data show the exact same message. Wow.
That's awesome.
Just jumps right out at me.
Well, I hear the music, John. Thanks for calling in today. It's always a pleasure.
Thanks, John.
Yeah, and guys, stay tuned. Larry's next, and all the hosts of TFNN got the deck stacked here.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.